gold's been a bloody dog, right? I mean, it's a terrible place to have your capital. I mean, if you look at the year this year, I mean, even as of this morning, I mean, fully loaded, when you look at the options that you could, where you could have had your assets this year, gold, like of the big stuff in macro, gold's been terrible. Like, I mean, it's an awful place to have. And it had an 18% drawdown, which is even worse. That's basically what the Hang Seng just did. It's terrible, right? Terrible. Get used to me saying that about things that you could like or that you've always liked, like your kids. Terrible behavior, Jack McCullough. Come on. Be better. Be better. My wife doesn't always like it when I say it that way. But if you don't want to be that way, don't be that way, right? Look at year to date. So on the year to date, these are big things in macro. Like for the year, if you just stayed long SPY and did nothing else in macro, you'd be up 18%. That's pretty good. Well, if you did a little bit more work and you said, well, I want to be long some inflation, so I bought myself some oil. Well, for the year, it's up 50%. If you took a blended portfolio average 60-40 model of a basket of commodities, not just oil, because that would be idiotic, the CRB index for the year to date, this is what people on CNBC just rattle off because there's no analysis. It's just what the score says, right? Gold is -5 this year. -5. Now, it peaked back in August and into September. So it's way worse from there on a relative and absolute basis to quad twos. So why am I pointing this out? Because this is called baggage. World-class baggage. So you still have latent or late cycle quad two selling by the market, don't forget, and the machine. Gold's not ready to rip. When it's ready to rip, it's going to rip. It's been terrible. I mean, even last week it was terrible. Last week it was down 0.7%. So we got time. And Jonesy, I want to make sure I said that because a lot of our subscribers, maybe by nature of the show or my delivery, I don't think it's my delivery, actually. I've worked on that. I think I've improved that quite a bit. Yes. Because I could only get better. People have such a sense of nowness about these quad pivots and asset allocation changes. I don't. I take my good old sweet ass time, good old country bone. Oh, wow. It's the story of the old and the young bull. Especially those of you that are old with experience, Bill. You don't need to be panicked. Take your time. Take your time. But you're not allowed to take your time if you didn't capture the full cycle. So that's what hurries people, Jonesy. I think that they're always it's FOMO, right? They're trying to catch up to these types of numbers. I mean, and by the way, these are wildly understating the returns that Hedgeye has, particularly on the commodity side, when we started buying them back in June of last year.